Looking, Nick, at the Renaissance IPO, always a good gauge of where sentiment is right now. You said that part of the reason we're starting to see more of this pipeline coming to market is because investors are starting to take more of the risk. I mean, beyond what we saw this week, what's in the pipeline that points to the fact that there's more appetite?
Yeah, for sure. The pipeline is still pretty quiet just because a lot of companies are out there waiting to see, how these deals do, what happens with the Fed and everything. But we know there's names like Turo that filed last year, look to poised to be coming again at the end of this year. Birkenstock filed a few weeks ago, a big consumer name there. And yeah, certainly the IPO index does show that valuations in the tech sector, but other sectors as well, have been improving this year. Definitely very strong in the first 8 months or so of the year. Things came down a little bit since then, but we're definitely seeing, I think, improved sentiment towards recent IPOs. Lower VIX is always good for IPO activity, which we have seen over the last few months. So there's definitely a lot of good indicators for future IPO activity.
And Nick, just playing off the sentiment issue there you raised, and when you look at the reception the names have gotten, Arm and Instacart, it's been choppy. I mean, what does that tell you about risk appetite right now, the reception they've gotten as they make their public debuts?
Yeah, it's definitely been a little bit of a choppy reception. They've all kind of traded down from their first open. And I think that goes to some of the skittishness in the market generally, obviously with the Fed meeting this week and the potential government shutdown. But also, I think it just shows that IPO investors are still not totally convinced that the IPO market is back. They're a little jittery. Maybe some of them are taking gains early once these companies price up. But on the flip side of that, I think the fact that they got healthy receptions, they priced at the high end of the range for Arm, raised the range for Instacart and Klaviyo. That does show that there is demand for IPOs out there. It's just a question of maybe follow through with the aftermarket trading.
And Nick, follow on that. Where is the appetite right now? Is it about companies that are growing with profitability in mind? We've heard for a few years now that it's not just about sort of growth at all costs. And if that's the case, I guess the second question for me is, what is in the pipeline? Those companies that have massive valuations on the private side of things, do those fundamentals match what investors are looking for in the public markets?
Yeah, and valuation has been what's held back the IPO market to a large extent the last few years. We've seen a company like Instacart is a good example, coming public at a valuation in the 10 billion range, whereas it was privately valued at around 40 billion a few years ago. I think there's a recognition that those kinds of valuations are off the table for now. They're not coming back anytime soon. So a lot of companies like Instacart have had to reckon with that, on their own before coming public. And then, yeah, the growth has slowed for companies like Instacart, but they've shown a lot of progress on first reaching profitability and then improving a lot the last year. And I think that's a similar game plan that we're going to see from other future tech IPOs. Klaviyo is another name that kind of reached profitability or at least break even-ish this year. And that's going to be important that they can demonstrate that they're going to be profitable going forward. And then Arm, of course, a very well-known name, large company, strong market share, very strong margins. So investors definitely want to see a good story about long-term growth, long-term margins. They're not just looking for kind of any hot thing at the moment.